Hello, San Diego. Well, we've seen prices begin to moderate, increases in inventory, and interest rates have recently dropped. What does that mean to you? Check it out. This is the August 2024 San Diego housing market update. Today, we're going to jump right in and look at the trend in median home prices. After 5 consecutive months of all-time record highs here in San Diego, we've seen a slight decrease in the median home price to $890,000. Well, what's causing that? As I've shown you in past reports, inventory still remains at near record lows. However, we have seen inventory increase slightly over the past several months, which does help to moderate prices slightly. Where are we sitting in this market right now? Well, we've got about 2.6 months of inventory on the market right now, which places us in the bottom side of this slide in a seller's market. Nationally, that's about 3.5 to 4 months here in San Diego, a warmer market and a stronger seller's market that we've got in this environment. Let's take a look at where we are. Interest rates, big news, have dropped in the past week and a half or so to the lowest point since January of this year. And that's going to have an impact on the housing prices as well as inventory going forward. So what does that mean? Well, this slide shows the impact of mortgage rates on buyer demand. And you can see the trend line over since the beginning of the year places demand in the weak and limited areas. However, now that we're near the 6.5% for conventional fixed rates and even lower for VA, we're moving into the good and strong, which may result in increased demand here in the San Diego market. What does that mean from a practical standpoint? Well, this slide compares rates in the last week to April 2024. And on a $500,000 mortgage, the difference in monthly payment is about $375. And that translates into about $135,000 over the life of a 30-year mortgage. What does this mean? Lower interest rates, more affordable, may put some more upward pressure on prices here in San Diego. This slide really sums up what we're seeing in the market. Mortgage rates have declined. There's still some apprehension in consumer confidence about interest rates and the market. We've seen moderation in high home price growth and slight increases in inventory. So overall, just a little bit of cooling in the last month in the market here in San Diego and at the national level. Where do we think mortgage rates will go? Well, according to Goldman, we can expect rate cuts by the feds coming up in the future. So let's take a look and see what we might expect. And depending on job growth and the job reports, we may see even more significant rate drops coming into the future. So we're coming into an election year, and oftentimes people, what can we expect when that happens? Well, this slide shows that in 8 of the last presidential elections, interest rates have gone down just prior to the election. So it'll be interesting to see what happens to interest rates as we get closer to the upcoming election cycle. What are we observing out in the field? Well, homes are sitting on the market a little bit longer, average market time at about 26 days. Also seeing an increase in the number of showings, especially since interest rates went down in the past couple of weeks. And we're seeing moderation in price growth, as I showed you on the very first slide. Just in summary, if you're ready to buy, now might be the time to strike. Home prices have been rising primarily because of lack of inventory or low inventory. And when we start to see interest rates go down below 6%, you may see a lot of people entering the market and pushing prices up even further. So if you're thinking about making a move, now may be a great time. And if you're thinking about making a move, please reach out to me. I'm here to be of service and answer any questions that you may have about the real estate market. I'm Woody Henderson broker for American Dreams Real Estate, and I'm here to be of service. Until next month.